In order for your equity curve to look something like this, you need a proven strategy that actually works on the markets consistently for years. Now, chances are high that you don't have a proven system that actually works, because if you would, then you would have payouts after payouts after payouts. So in this video, I'm going to show you my entire strategy and how I was able to pull this off using my strategy that got me interviewed by Funding Pips, which is basically the biggest prop firm in our industry. But Funding Pips is not the only prop firm I'm funded with multiple prop firms because I'm expanding my capital. And here's the thing, your favorite guru on YouTube would be cherry picking setups and dates where he already knows how the price action will look like. To prevent this from happening, I will take a random date anywhere from 2022 to the present day. So let's see what we get. It's January 27th, 2024. So onto the backtesting. First things first, you only want to trade USDHF. That is the main pair you're going to trade with my strategy. Now you can try it out on different pairs, but most likely you will not get the same results, and therefore I only recommend trading this pair. However, if you do find a way to also make another pair profitable, then go on. Now what I like to do is go onto the weekly chart and look how the things are looking like currently. Now we can already spot that we are most likely going for the previous week low and not for the high. So our buys for the entire week is bearish. Then I would like to go onto the daily chart to further confirm that we're going to go lower. Now, can we spot anything that is suggesting to us to go lower? Currently, besides having this daily candle to go lower, we don't really have much else. Besides, when we go into the forward chart, what can we see? Relative equal lows being formed. Now, relative equal lows are a very strong indicator for us to go lower. So, since that is enough confirmation for me, because this strategy is fairly simple, we want to skip onto the 0 AM candle, always UTC 0 time, and we just want to take a trade onto the downside. Now, our take profit is going to be about 10 pips, almost to that previous day low, and our stop loss is going to be 50. So let's see how that's going to play out. Now guys, you can have the best strategy, the best risk management, and also be a master at psychology, but every professional trader needs a professional journal. That's why I personally use TradeLens. Now if you want a 10% discount, it's the second link in the description. Market order, and that's straight up a take profit hit. Now, of course, you'll be already wondering, why is your risk to reward so low? We are trading a negative risk to reward, because that is the only way to ensure that we have a very high win rate. If you have a high risk to reward, you will not win almost every single time, because with a 1-4-2 risk to reward, you will not have an 80% win rate. It's not possible. If it would be possible, we would be all the richest man on earth. So we have taken a trade, so we're going to skip on to the next day, because we're only taking one trade a day. That's all I want you to do in this strategy. One trade a day, loss or win, that's it. So we're skipping on to the 0 AM candle, and we're going to the daily chart. What can we spot? Have we taken out the previous day low? Yes, we did. So in this candle, I cannot tell if we're going for the previous day low or high. Why? Because we have already mitigated the previous day low, and I can't really tell if we're going to go one more time lower, because this might as well just reverse and create a swing low. We're not going to trade this entire day and skip on to the next day. So skipping to the 0 AM candle once again. So we have actually gone lower, but we couldn't really know that because there was not enough confluence, and we're only trading the highest probability days. So once again, there's more of a 50-50, because every single day you want to ask yourself, are we going for the previous day high or for the previous day low? If the answer is I don't know, then you don't want to take a trade. So here once again, we don't really know if we're going for the high or for the low, so we're going to skip the entire day once again. Going up to the 0 AM candle, and let's see what the next day gives us. So in here, once again, I can't really tell if we're going for the previous day low or high, because we already went for that low. So all the way to the next day, and you basically repeat that until you can be sure whether or not we're going for the high or for the low. Now for this day, it is already more specific. Now you'll be saying, okay, but this is also kind of a 50-50 here. No, because we have already taken out buy side liquidity in here, and if you go into the 4-hour chart, we have also left relative equal highs, which further indicates to us that we need to go higher. Now we have also left a bunch of wicks, so basically testing these entire levels multiple times, liquidating as many people as possible. So now I'll be looking for longs. So going to the 1-hour chart, keeping on to 0 AM candle. Even if this goes lower, it's no problem. We want to trade onto the upside because our bias is bullish. This is the next thing. You always want to stick to your bias, and if you have determined the bias, you want to stick to it. Even if it looks like we're going into a loss, always stick to your bias. And here's another thing why I also took this trade, because right now you can see we are starting a consolidation. Now this doesn't mean that we just can't go higher or lower and start being volatile and trendy again. However, the best conditions to trade this strategy is in market conditions like this, consolidation phases, because even if you're wrong in the trade, you will most likely still end up in a profit. And once I see this kind of formation where we're just hovering around at a specific area and price, that is the best conditions for us to take a trade. But keep in mind, consolidation is always short-lived. It will not last forever, and most of the time consolidation is only a preparation for a big volatile move or just a trending market. So keep that in mind and be patient. So what do we do after we have taken a win? we skip onto the 0 AM candle and see what the next day gives us. We go onto the daily, and now it's even worth going to the weekly chart. Now what can we spot? This weekly candle had a big wick onto the downside. However, the next week, so basically the week that we're about to trade, has no wick onto the downside. So this is more of a 50-50 on the weekly chart, so I cannot really tell much in here. If you would ask me where we are going to go, it's for the previous week low. But since we're rejecting off of this level because we have a big wick, this is more of a 50-50 candle as we have just discussed on the daily chart. Now, can we spot more confluence on the daily chart? Not really. Although we have already established movement onto the downside, this is not enough for me to take a trade. If we're going to the 4 hour though, we have relative equal highs. Now you might be saying you had so many things that speak against you for taking it long. Yes, but this is more of a discretional way of trading. You have to weight the confluences. So if you have one thing that speaks for you, but 3 things that speak against you, that one thing that is actually speaking for your trades can hold so much weight that the other 3 things that speak against you don't really matter. And this is exactly the case in this one. However, before we would like to trade onto the upside, I want this candle to be taken out. I don't know how much chart time you have. However, if you have looked at a chart, these candles like to be taken out, especially because we have an FNG in here and a BPR range. If you look even closely, I'm going to mark it out for you. There you have the entire BPR range. So we actually have reasons to go lower. Although the entire bias is going higher, we still need to go take out liquidity in here, and only then we can go higher. And it doesn't even have to go all the way in here, but it leads to this low. So let's see what's going to happen. Trading higher. It is more of a consolidating day. So we didn't really get an entry because we did not trade lower, but also not really higher. So this was just an unlucky one and we didn't miss the trade. So we're just going to skip on to the 0 AM candle as always, and let's see what we get. So we have taken out the relative equal highs in here, and we go once again onto the daily chart. Now, once again, we are in a consolidation phase, which is perfect for us. This big wick is indicating for me that we need to go lower, especially because we have still this candle, which most likely needs to be traded back into, similar to this move. Now, of course, we have traded way too much in order to trade this. However, context matters a lot. And in this context, this wick is indicating to me that we had something rejecting off of it. So I am more likely to take bearish price action now. So going to the 4 hour chart, what can we see? We have a bunch of liquidity residing up. So in here, in here, and in here. So what we want to do, we want to trade lower because those once again are relative equal lows. Now, if you take this swing low, this does not really contribute to the relative equal lows. It's only this low and this low. So we already waited for the 0 AM candle, and from here on, we just want to take a trade onto the downside. 10 pip take profit and 50 pips stop loss as always. We're going to enter with a market order and let's see how it plays out. And we have taken a loss. Now I'm glad that we have taken a loss because for a long time in these backtesting sessions, we did not have a loss. And I want to show you how I'm recovering out of losses. Now to a lot of people, this will be like, you lost your entire account, but no, we're only risking 1% per trade. That's it. We're just going to stay patient and professional and look out for the next day. What is it going to give us? So we're going to skip onto the 0 AM candle. Here we go onto the daily chart. Where are we going to go next, for the previous day high or for the previous day low? Of course, for the previous day high. So this is actually a high probability day to trade. So once again, I can also spot that we have gaps in here. So what do we want to do? We want to trade lower because gaps like to be filled out with a body closure. Since we know that we want to go for the upside, so basically for the previous day high, we want to take a trade all the way higher in here. Now, since our risk to reward now has to be a 0.5 instead of a regular 0.2 risk to reward, we simply want to move our entire entry lower until we get a 0.5. But since we have already established movement onto the upside, I expect this to go even higher, so we can even increase our take profit in this case, and therefore moving our entire entry a little bit higher. Now let's see if we get tagged in. Now in this case, even if we take out the previous day high or even this liquidity in here that I've marked out, we can still enter the trade. So let's see if we get an entry. We've tagged in and see what happens, and straight into our take profit. Now of course, you will also lose setups doing it this way if traded all the way higher in here. So completely ignoring this entire liquidity that I've marked out, and most likely you would have not entered the trade and canceled the entire limit order and waited for the next day. But that's another win for us. So as you can see, we are just increasing our risk to reward instead of trying to get all of the profit back with a 0.2. So what are we going to do next? Skip forward onto the 0 AM candle and see what happens. So go onto the daily chart. Where is it more likely to go, for the previous day high or for the previous day low? Now in this case, it is very easy to tell that we're going for the previous day high and not for the previous day low. However, until we get tagged into the trade, we most likely already taken out the previous day high So this is not a high probability day because you would ideally like the entire body candle to be somewhere in here because then you still have room to grow higher. Now I'm not saying that this candle cannot push all the way higher, but as of right now, we don't want to take a trade, especially because we want to take a higher risk to reward. We're just going to skip on to the next day once again. So I've skipped on to the next day and currently we are at this BPR range. So we don't really know if we're going for the upside or we're going to stop in here. But if you ask me, probably we're just going to ignore this BPR range, but we might as well just trade lower, then go higher, or just completely ignore everything that we have lowered here and just continue going lower. So since we don't really know what's going to happen, and especially because this is more of a 50-50 candle, I can't really tell. So we're just going to skip on to the next day once again. So we have completely ignored this BPR range I have marked out. We have gone for this high. Where are we likely to go next? Now, right now, it is way more likely that we're going to go for these highs in here. Simply because now we have confirmed movement. We're ignoring everything before that has stopped price from going higher. So for this entire price action move to return all the way lower is very unlikely. This is the last point where I would expect price to go until we go higher again. But out of experience, if we're already so close to relative equal highs, we might as well just go there. So it's way more likely to go onto the upside. Now this is more of a long-term perspective because we also want to look, what is the current day looking like? Are we going for the previous day high or for the previous day low? Of course it's the high, so our entire bias is bullish. So we are already at the 0 AM candle, so we're going to take our standard risk to reward, stop loss 50 pips and a take profit of 10 pips. But since we have taken a loss before, we're going to increase our risk to reward to a 0.5 because we want to recover the entire loss. Let's see what happens. Okay, we get tagged in. I'm going to skip forward. Yeah, and there you can see we have actually hit the take profit. Now, even if this would have been turned out into a loss, it is no problem. We still stick to a 0.5 risk to reward. As you can see, we have recovered our entire loss, not within multiple months of trading, but just within 2 trades, because instead of increasing our risk, we have just increased our risk to reward. So after we have done that, we're just going to continue trading the regular way as we have done before. So skipping onto the 0 AM candle, going onto the daily chart, where are we likely to go? Now in this case, we have already violated the previous day high, but since the relative equal highs also combined with an entire FVG are just so close, we are still taking a long onto the upside. So let's go to the 0 AM candle and trade it all the way higher. Now stop loss as usual is going to be 0.5 pips and our take profit is going to be 10. Since we have recovered the loss, we just want to take the regular trade and not the 0.5 risk to reward. Let's see what happens. I'm going to skip forward. And that's not a take profit. Now, of course, we have been in this trade for a couple of days, but it doesn't have to discourage yourself because you just have to stick to the analysis, stick to the rules, and just let the trade play out. That's all I'm asking you for. So we're probably going to do one more. We have still not traded all the way to the relative equal highs. We want to skip onto the 0 AM candle. So there we are. Since we have still not gone onto the relative equal highs, combined with this FEG, what are you more likely to do? Regardless of how the daily candle is looking like, the movement is longing for the upside. So what we're going to do is go into the hourly chart, 0 AM candle, and take a trade onto the upside. 50 pips stop loss, 10 pips take profit, market order, and let's see what happens. Straight into our take profit. So you see, although we're taking a negative risk reward, we are still able to consistently make money out of the markets. Now you can even increase your risk because this win rate is very high. That way you're ensuring that you're getting even more out of the strategy. And there is a lot of refinement you can do onto the strategy. Keep in mind, it already works on its own. However, you could refine it by just having a lower entry. If you already know that this entire liquidity is being taken out before we go higher, your risk reward could be way more, equaling to a 1 or even a positive risk reward. I just want to teach you the entire concept that I'm using with this negative risk reward because this already will get you very far if you're able to stick to the analysis every single time. So I know what you'll be thinking. This guy traded for 2 weeks and has only made 0.7%. Now to a lot of people this is very bad, but this is actually what trading looks like. And keep in mind, I have only risked 1% per trade. Since the win rate is so high, which is 85%, but bear in mind, this is just 1 month of trading. If you do this for a series of months and years, your win rate will significantly increase. This is what trading is actually looking like, and you should not go for a 100% return within 1 month. You should only look for small gains over time because that is building your capital and account size. So there you go. You now have a proven system that actually works, and you can apply it to the charts yourself. But chances are you already had a proven system that works, but you were not able to execute perfectly because you lacked guidance. I've been trading for over 5 years. I have more than 500k in total funding, and I'm also funded with multiple different prop firms. Now, I've been interviewed by prop firms basically explaining how I've gotten to all of those payouts. And in my mentorship, we are achieving a 95% win rate because, as I said previously, you have to trade the strategy for a longer period of time. in order to become this profitable with the strategy. So you can see this is not an ordinary Discord where I'm just trying to preach some random concepts. I'm actually showing you something that actually works on the markets to make you a profitable trader. So anybody who joins my mentorship and is not funded within 12 weeks of being in my program, I will personally sit down with you one-on-one explaining how to get profitable and how to get funded step by step so success becomes inevitable. This is not an ordinary mentorship as I have previously mentioned, so the capacity is very low. If the first link in the description is still working and you're able to join a mentorship, then it's still open and you can join. However, if it doesn't work, then you have to wait till the next cycle, if there's even going to be a next cycle to begin with. If you have made it this far into the video, make sure to like the video, subscribe to the channel, and comment down below what the most valuable thing you learned today was. See you guys next one.